I would like now to invite to the floor STIG ENEVOLDSEN to provide a view from, I'd say, the profession, the European profession, on the new directive and its challenges. And of course, we will have then time to debate the issues.
Thank you, Peter, and good morning. I hope you wake up after last night's party. See whether my slides will get on or whether In the meantime, I can promote the FEE app, where you can actually get a very good information about FEE and a lot of the papers that are published, including the fact sheet on the directive, which is actually very good. If you want a brief overview and quick overview, it's 8 pages, and it covers most of the content, and I recommend that. I often use it myself for a quick read, so you can do that as a help in your daily work. And I think if it's not outside, then it's certainly at the FEE booth. I saw it yesterday, so you can go there and get one printed copy. And you can, if you are not to printed matters, you can do it at the website. Thank you. Let's go on to talk a little bit about the new directive seen from FEE's perspective and my personal perspective as well. It took almost 5 years to agree the new directive. And there was, of course, this issue of conflict between, do you want good, transparent information, informative reporting about the companies, or do you want to ease the administrative burdens? And that was certainly a fighting area, a fighting field, and in some respects it turned out to be to the benefit of easing the administrative burdens. One could also say or claim, to be the devil's advocate, there's a long way to harmonization in Europe, because basically many countries, they wanted to maintain their own positions the way they were used to report with the national backgrounds and traditions. And of course, that is also based on the fact that in many countries there is a strong link between tax and accounting. If the bottom line has to be the taxable income, there is a limit to how much you can do in the income statement to have transparency and different measurements. And then I dare say this, that many civil servants are often lawyers. It means, we speak a different language when we discuss these issues. It means different things. And that, it was certainly interesting seeing, I know DJ is a lawyer, and I have apologized on beforehand for my setting here, but I was in some meetings where we had, most member states represented to discuss these issues. It was clear, depending on who said what, that there was different input and different starting points on what this was about. And as DJ explained, the directive is a building block approach, which means requirements increase with increasing size of company. So it means the basic is the small companies. So there you have the information required for small companies. In the micro regime, it's the basis less something. And if you go to the medium-sized, it's a basis plus something more note disclosures, more specific measurement criteria. And if you go to the large companies, then you have basic plus more and plus extra more. And there you get to the biggest amount of requirements for companies. Of course, as a Dane, I like this model because that was what we introduced, or the legislator introduced in Danish legislation 15 years ago. So it's pretty familiar to me, but I think it's a good approach. It makes it easy to read. But as Didier said, it was not possible really to get all the options out. There are still more than 90 options, 90 options in the directive, and it gives that there's still a long way to transparency if they're utilized in different ways in the different countries. We have the fundamental financial reporting principles. They're the same as we're used to from the old directive, so I'm sure you all know them by heart, and they are not very different from other accounting regimes. And they have the additional ones we have also been used to in the directive. You have to separate value, asset and liability, no set off, etc., consistency between accounting periods, and opening balance should be the same as the closing balance, which is quite nice, to not to hide things in between years. However, there are availabilities for member states to reduce comparability by sometimes allow set-off, sometimes not use substance over form, which is a new principle in the directive, sometimes not use materiality, and sometimes allow more prudence. That's part of the 90 options. We have the following views that substance over form and materiality are crucial concepts and should always be applied one way or the other. This recast of the two directives into one is a useful first step in the development of a principle-based framework suitable for the 21st century. It's a first step, and as we know, it goes 45 years between, or 40 years between full evaluations and changes of directive, so maybe at the end of this century we may achieve the principle-based framework. That's a second change we will have in the 2080s, when your grandchildren is in this area of work. The profession can add value in member states by assisting the governments in transposing the directives and choosing the most suitable options, trying to see whether it's possible to get to transparent and informative reporting. And of course, this is what governments need to implement, but of course companies can supply information that is useful to the users. Let us look at the micro entities. They, in short, they have to have accounting records, but they need only to publish an abridged balance sheet. An abridged balance sheet means current fixed assets and current assets. That's very abridged, right? And on the equity liability side, equity, provisions, and liabilities. That's not a lot of information, is it? And they were the 73% of companies in Europe. So interesting. For small companies, you again have no obligation to require in the legislation to publish profit and loss account or management report. You only need to publish the balance sheet and the notes. You could limit the legislation to only require that, but of course you can require more than that. But again, if you only have the balance sheet, then it's difficult to evaluate what the result of the year has been. Member States options for medium-sized companies, there you have to publish a full set of accounts, but they can be somewhat abridged. And if you look at the fair value, there is a possibility to require or permit fair value use, and probably most countries many countries will permit it, but probably not fully required. Cash flow statements, there's no mention of cash flow statement, but countries are allowed to require additional statements, including cash flow statements, but not for small companies. No. Here again in FEE's view, we have that FEE supports combined accounting directive that supports the think small first approach, but it should be allowed to go beyond the fully prescribed small entity disclosures if need be to make a true and fair view. For micro, it is by definition in the directive claimed to be true and fair, and that's a definition, so that's fine. But it should be possible also for companies to go give additional information, and it is, I think. And fair value should be extended beyond the currently permitted in the directive, and cash flow statements should at least be mandatory for large companies. That's the FEE view. On IFRS for SMEs, basically we have to remember the directive takes precedence over IFRS for SMEs, and the ISB should really change the two conflicting items in order for them to be compatible, because we think that IFRS for E is actually a good basis for preparing accounts, even though there are quite a bit of note disclosure requirements. You could think about these things. We could think about this in relation to large companies as a question, not for a question to be answered, but for a question to be thought about. For large companies, a lot of information of the non-financial nature is required to be in the management report, and is the management report and a financial report, annual report, is that the best place to require these information, or should it be considered maybe to publish them different places in different reports and on the website of the company, or something else I need in the future? In the future, we need to think about how to interrelate these things. And the question one might ask oneself as well is, what is the objective of financial reporting? Is it to not be of any cost or any administrative burden and not give information to suppliers and creditors and banks? Or is it to inform users and creditors about the company and its performance? Thank you very much.
Okay.